I've tried over 20 day trading models, and until I understood distribution theory, I was making the exact same repeatable mistakes about every single trade. And this strategy simply explains to you how to find high precision entries every single trade. Now, first off, let's get into who am I. My name is Faisal Al Samurai. I've made over $1 million at 17. I started all by day trading, but now I own two different software companies, one of which is Tradnova, a trading software company. I have been day trading for over 3 years now. Started making trading content in July 2024, and I opened up the mentorship at the end of this September, which is one of my best decisions because recently, as you can see, been changing just straight lives. Funded, a whole bunch of wins, um, payouts, and these are just a couple of many. My overall win rate is at 84%, and this is the last 9 days P&L. I've made $55,000, and that says a lot because I haven't even been trading as often recently. Matter of fact, this whole month I didn't even enter a trade, but I will be getting back into it next week. And that's simply because I've been focused on something else. But the strategy itself presents itself every single day, and as you can see, there was a point where I'll take like my members take trades about every day, and one of them hasn't lost in about 2 to 3 weeks. So it's obviously very high precision. This is my Charles Schwab checking. I have over a million in there, and that says a lot because for someone who is 17, I have fucking accomplished a huge amount. So, let's really talk about what is the distribution theory. Every market cycle is engineered through a sequence of accumulation, manipulation, and distribution. The goal isn't randomness, it's efficiency. Now, this says a lot because, first off, don't get it wrong. The strategy is not AMD. AMD is part of the strategy. Matter of fact, we use AMD a lot different than how it usually explains of how ICT traders do it, right? And even though I consider myself an ICT trader, I still think that some of the concepts needed to be refined, and I've refined them in my own way, and I've included them part of the distribution theory. So, simply, yeah, AMD, we don't use that all the time. It's part of the theory, but some days it will not portray itself, but it usually does, and we use it to find distribution. And when it does portray itself, it's very easy to find it. So, distribution theory provides a systematic framework for understanding how institutional players move markets through deliberate phases. This methodology reveals that price action isn't chaotic, it's a coordinated effort to achieve maximum efficiency in transferring positions from smart money to retail participants. Whole bunch of big words, let's just leave this part out. So, the core premise, right? The three pillars. So, distribution theory operates on the principle that markets move through synchronized, I'm not even gonna try to pronounce that word, coordination of three critical elements, right? So, you could read this, the rest of this. Liquidity represents the fuel, time provides the rhythm. We trade at a specific window every single day, and we call this window the ICT macro. I've added an extra 10 minutes before it for entries, and I'll get into that right now. This is a quick framework architecture. News drivers are very important. We establish narrative direction and institutional bias. A lot of people do not use this, and it genuinely just messes them up. I would say that news drivers is actually one of the most important things when it comes to trading. Why? Simply because liquidity lies liquidity lies in news. Sorry, and if there's like a lot of news, like for example, when Trump's tariffs came out at one point, there was a lot of news that day, and market was dumping. It will tell you narrative, direction, and institutional bias. Now, the second thing is order flow. I use this by using breaker structures and market structures. It's a very small part, but the main way that I use it is the 9 and 21 EMA. It's the only indicator that I use, and is very efficient for finding order flow when it comes to finding distribution. So, the third thing, the most, probably, if not the most important thing, second most important thing, ICT macro times. There's only two times that I trade during the day. They're both 30 minutes, and you only need to trade one time a day. Doing this will genuinely save your psychology. And the reason why we only trade these two times is because they're called the two kill zones. And simply, market lies the most liquidity in these time windows. So we'll get into that in a second. AMD cycle, recognize daily market rhythm and phase transitions. We do this through sessions. And displacement, and a lot of people do not use displacement, which is crazy to me, and that's why a lot of you guys are unprofitable. Displacement is simply waiting for a reaction off of a simple PD array that happened in the market, right? So let's say we have a fair value gap. You guys just enter when market taps into the fair value gap. No, wait for market to react. That is what displacement is. And then we have SMC rebound zones, and these are PD arrays like fair value gaps, inverse fair value gaps, rejection blocks, and a whole bunch of other things, right? So, news drivers. News events provide the fundamental catalyst that institutions use to justify liquidity rates and directional distribution. High impact release create volatility that masks large order execution while giving retail traders a logical explanation for price movement. So the most important three things you need to do is track high impact events. You could use Forex Factory to do this. It's very, very simple. In my Discord, I post weekly outlooks every single week, explaining to you guys whether it's going to be low prob or high prob day. And on low prob days, you guys should size down. Essentially, that's what we want to do. And on a high prob day, size up. But again, do not get too cocky, because some high prob days end up being more low prob than low prob days. You get what I'm saying? So it's simply just, even though that's very, very rare, it's simply more like of a, okay, we understand the two kill zone times, and if the news is with us, that means we're going to expect a lot of liquidity during these areas, right? So align directional bias. If order flow is pointing one way and we're distributing towards a singular side, then we can do this. We don't even have to distribute during a single side. The strategy presents itself every single day, right? Even when market's not moving 200 points down. And I'll explain this in a second. Reduce exposure and chop, right? Size down or stand down, stand aside during low probability conditions, conflicting drivers, thin liquidity periods, or ambiguous fundamental outlook, right? Very simple. All right, so the next important thing that we use is order flow, reading market intent. Now, obviously, this is just a part of the strategy. A lot of people make this like the entire strategy. No, it's just simply another confluence. If market is high probable in one day, you're going to see order flow dumping towards one side. But even then, we use the EMAs just as an extra confluence. Like if market moves through an EMA, we're expecting market to keep going towards a singular side. If market dumps the other way and beats EMA, then we're expecting it to move the opposite side. It's just a confluence. Now, to pair this with the EMA, we use multi time frame sync. If it's a continuation day where market is just simply dumping towards one side, you can see multi-time frame sync, and you're going to find it very, very easy high prob entry. It's very, very simple. Order flow is not that difficult, and when we hop on the charts, I'll explain it all to you. So now let's talk about the ICT macro times, windows of institutional activity. Not all trading hours carry equal weight. Institutional algorithms execute during specific windows when liquidity is optimal and price can move efficiently without excessive slippage. These are the macro times. So we have two specifically. This is the main one that we trade, and this is the secondary one. So 9:40 to 10:10 a.m. Eastern, New York, right? Initial directional move unfolds after overnight and pre-market manipulation. Asian and London liquidity has been swept, setting stage for New York distribution phase. This is where it is, right? Most liquidity lies here, and you're going to find your best entries in the zone. This is the second one, and same thing. During these 30-minute windows, watch for displacement events that confirm institutional participation. Very, very simple. So, now we've understood that, let's talk about AMD, the daily market rhythm. This is how I incorporate AMD, and this about shows itself every single day. Asia accumulation, London manipulation, and New York is the distribution phase. It's very, very easy to find this. It's genuinely not difficult, and when I hop on the charts, you can be like, why does this actually present itself so much? It's genuinely stupid. The AMD model isn't a rigged template, it's a probability framework. Some days compress a cycle, others extend manipulation through multiple sessions. And that is exactly what I mean, that we don't simply fully rely on this like how ICT did, right? What we do is sometimes the manipulation phase could actually extend to New York. And what we do is we set up distribution levels. And I'm going to make sense of all of this when I actually hop on how to trade the strategy. So, displacement, the signature of commitment. Defining characteristic. Displacement isn't merely momentum, it's speed combined with efficiency. Right? So let's say after market rebalances into a PD array, we want to see it move with speed with efficiency. Right? And when it does that, market will continue to run for 20 to 30 points guaranteed. And that's how much we aim for per trade. And it's crazy because people underestimate displacement. If you do not use displacement, you are simply pattern trading. You're waiting for market to respect a couple patterns and then entering. What we do is we wait for a reaction. We wait for market to react from a zone, and when it reacts, we are guaranteed 20 to 30 points if our liquidity is correct and we have a good draw. It's very, very simple. And these are some of the SMC rebalance zones, PD arrays, optimal reentry points. Actually, not reentry points, but rejection blocks on 21 EMA zones, fair value gaps, and previous PXH, PXL. Very simple. So this would be a very simple integration. Monitor news calendars and then confirm order flow. Wait for the macro time to open. Recognize AMD cycle. Wait for displacement after a rebalance. So this actually switched. I don't know. It's like this. AI made this whole presentation, by the way. So now going on the charts, you can see that this plays out almost every day. For example, today, the most recent day in the market, right? I cut it out till 10:30. But what happened? Asia accumulates, London manipulates, and New York distributes. Now, first off, how do we know which way market is going to distribute? We want to set up our distribution levels. All you need to do is mark down 2 points in where liquidity lies in some sort of PXH and PXL. In this case, you can just simply mark it out like this and see which way market distributes. You want to wait for a rebalance, and then boom. Sometimes what market does is it might manipulate a low and then continue towards the upside, like here. But in terms of this day, what happened? Market respected these highs, and as macro open, it continued towards the distributing side. Could have entered here, aiming for these lows. Very, very simple example. Now, let's really talk about how this works. So, same thing. Set up your distribution levels. Right after you set up your distribution levels, all we need to wait for is market distribute. In this case, market distributed towards the downside. This is the best case scenario. Okay. 9:40, the macro opens. What happened? Okay. Let's go back to when, let's just go here. This is actually, I really like this. Right? So, or sorry. No. Okay, let's go back to when the macro fully opened. Okay. Alright, so we could say that we have draws all the way down here. Right, we're assuming this is our draw on liquidity. Market wants to take out these lows. And previous to that, we have a PXL here. Okay, so we could potentially aim here if market reacts. Now, what is the first thing we want to wait for? Okay, so market respected this fair value gap. We're pushing down order flow. The EMAs are pushing down as well. After London manipulated, we displaced through EMA. And now all we need is another rebalance after the macro open. So what we have here, a 1 minute fair value gap. We mark out. And if market reacts to it, then we will look for shorts. So let's play it out. Okay, perfect. Reaction. You can see market took out literally the 50% range of this fair value gap and then continue towards downside. Okay. So what we could do is simply aim for 20 to 30 points, right? Strong reaction. And I know you guys are thinking, okay, market didn't even beat this previous wick. But the reason why this is considered displacement is because the move was from up here to all the way down here. You can't just look at it as, oh, it's just this candle. No, because we came up here and then we pushed all the way down, which means there was a sensitive zone of liquidity there. We reacted very strongly. Now we've identified that. We just need to set up a good RR. We can set it up at these previous wick highs. And now we just play the trade. Very, very simple. It's a very, very simple concept. It plays out, right? And this is essentially all you need to do to genuinely win. It's not difficult whatsoever. A lot of you guys overcomplicate things. But this is genuinely all you need to do. We had the AMD phase. We saw order flow, we pushed, we reversed, and yeah, It's very, very simple. But the more important part that you need to see is manipulation. In this case, we saw manipulation where we can consider this manipulation because we explained AMD during a session thing. We also need to explain it. But before you enter a trade, you want to make sure we have some sort of manipulation confirming that market did take out a lot of people before it dumped, because this is how market likes to move. So in this case, we manipulated all these highs, accumulation, manipulation, and then we distributed towards the downside and we caught the X. That's very, very simple. Sometimes what you'll see is macro opens, and then what? We have these lows, and we create some sort of turtle soup, right? And I have full extra on this on my Discord. And we took out these lows from potentially one of our previous lows, and then all you need to do is aim for these highs after market rebounces, and then boom. A simple thing. As long as you're waiting for what? Displacement, a rebalance, and then order flow. We beat order flow. And sometimes order flow doesn't even need to switch. We just need to displace above it. But yeah, that's another good example. But yeah, honestly, the strategy is very, very simple. As you can see, $55,000 in the last 90 days. It's a very, very simple concept. And what you need to understand is it's very easy, right? But the most difficult part about all of it is the psychological part, getting your confidence down. But in terms of getting the strategy down, it's a simple strategy. Obviously, it goes a lot more in depth. I'm just giving you guys like the good part, like a very, very simple outlook. If you do want to further your knowledge into learning the strategy, you could literally join the Discord. It's link in bio. Join it up if you genuinely want to start taking trading seriously. A mentor does a lot for you, and you can literally look this up on Google. You will save a year to 2 years just getting a mentor. So, get rid of your ego. Understand that getting a mentor is a positive return on your time investment. So just do it, and I'll make sure you become filthy rich. But yeah, other than that, very simple. Thank you for staying till the end of the video. If you stay till the end, comment down understood if you understood everything. Okay, peace out.